Get straight down to business, and today we have a special feature for all of you. The crypto crash that we saw this week, nearly $1 trillion of market capitalization being wiped out from the crypto world. The most mature crypto is talked about as being the Bitcoin, which crashed over 50% from the peak of $65,000 recorded just earlier this year. It has given up all the gains since Tesla's announcement on February 8th that is going to be buying Bitcoins worth about $1.5 billion. Massive volatility. You can call it an insane amount of volatility. What are the lessons that have been learned from this? For investors, and we've been hearing about how they've been levering up, and they had to be liquidated. So much so that in 24 hours, 730,000, that's 7.3 lakh trading positions were liquidated worth over $8 billion in just 24 hours. That's the kind of leveraging that we're talking about in the crypto world. What are the lessons for the investors and the traders? And secondly, what about the exchanges? What about their fiduciary responsibility? There was a common pattern around the world, and that was of global outages. We had global outages from whether it was a Binance, whether it was a Coinbase. Even back home in India, we saw exchanges seeing outages, not being able to close trading positions, and all of that. So what are the lessons learned? With that, I'd like to invite my two guests for this conversation. First up, Sumit, the co-founder of Coinex, an exchange platform. We're also being joined by Akshay BD. He's a well-known crypto investor and writes a lot about it as well. Thanks, gentlemen, for joining us here live on this Friday's edition of Startup Central. We still don't know how the Bitcoin is going to fare for the remaining trading session, but Sumit, I'm going to come to you first. How are exchanges ever going to go back and say they are safe when exchanges have not been able to close trading positions? When you saw on exchanges worldwide different prices for the Bitcoin, it felt so fast that there were different prices also being recorded. How are you going to go back, with what face, and say we are a safe platform? And when I say you, I mean exchanges as a whole.
Sure. Nayantara, I think the reason why, because first of all, I think Coinex was still up and running for most of the time. In fact, a couple of hours there were outages. There were dependencies on other service providers. For example, there was a time when OTPs were not getting delivered on time, and that was because the OTP service providers, it was queued, and we had to overnight switch to another OTP service provider, and then I think in the next couple of hours it was all up and running. Sometimes you're also, there is also dependency on external exchanges, so we are connected to global exchanges, and they stop taking orders. So that is where I think for a small period of time, users were not able to place orders, and because we were not able to route the orders to other exchanges for liquidity, that is where there was a small amount of time where people were not able to place orders, or the orders were not getting executed. But otherwise, I think most of the time, even during extreme volatility, the system was up and running.
But I come back to the first question, Sumit. With what face will exchanges go back to investors and say, yes, we are safe trading platforms, and positions couldn't be closed when different prices were being recorded on exchanges worldwide?
Sure. Well, I think I would accept that there is there's a lot of things for us to learn from such instances. In fact, exchanges, all the exchanges are continuously trying to improve their infrastructure, and it's a 24/7 market. I think one thing that we need to realize, unlike in equity markets, which runs within a specific time period, crypto exchanges are a little difficult to operate in a way where they're 24/7 and there is no downtime that you can afford, right? And I think that is where things get a little complicated, and there are other dependencies as well. So I think there's still, and this is the first time that India has seen such sort of spike peak load periods. So all the exchanges, I think there's a lot for them also to improve on their infrastructure. And at our end within Coinex, we have picked up this mega project where this is one of the high priority for us, where we are ensuring that even during the peak load period, the exchanges are, Coinex is up and running no matter what the external circumstances are. So that's something that we have picked up. There's still a room of improvement, and then we are working on that.
I'm going to come back to you to get more details on that, the upgradation, the investments, and all of that. But Akshay, let me come to you now. What are the big lessons for the investors, for the larger community at large as well? I think just seeing the wild swings, one has to say that this is not for the faint-hearted. You need to have strong nerves to ride through this kind of volatility. And therefore, is the corollary of all of that also, if you don't get it, stay away, forget about FOMO, is only for the savvy.
Thanks, Dantara, for having me again. I think it is true that it's for savvy investors, but the bar to be savvy is incredibly low in crypto. All you've got to do is buy and hold a crypto asset you believe in for the long term, right? The reason some of this stuff happens is the chart of Bitcoin, if you look at it, especially during a bull market, is basically a chart of greed and fear, right? You can chart, the ups and downs are a direct reflection of greed and fear. And in a phase where people think they can make a lot of money in a very short duration, they end up levering up, right? So they add a lot of leverage to the system. Now, when you lever up, now this may be a bit technical, but the market maker has to buy Bitcoin in spot to hedge against the position, which means there's a positive feedback loop. More people are levering up, more Bitcoin is bought by the market maker to hedge. So on the way up, everything is good. But when that trade unwinds, then people are selling into basically the parabola, right? And that ends up cleansing out all the leverage, creating a new base. There's a price discovery mechanism that allows people to uncover what the new price is. And then that sets up as a base. It goes maybe sideways for a few weeks or months, and then prices go up again. And in markets that run 24/7, we've never in human history had a globally connected world where everybody is looking at the same price chart, all 7 billion people, right, potentially, and trading on the basis of that chart. And I think you just get these massive periods of fear and greed every now and then, but volatility is a sign of life, right? It's a sign. There's a hedge fund manager called Jeffrey Gundlach who says the frequency of volatility multiplied by the extent of volatility is a constant. So if you have frequent volatile periods where it flushes out leverage, cleans up the system every now and then, it's robust over a 10-year period. And I'll basically conclude by saying that if you've ever held Bitcoin for more than 3 years, you've never lost money.
Yeah, I take that point that even during this entire volatility, what we also saw was, yes, Bitcoin gave up on all the gains from February. It crashed over 50% from the peak level, but it was still on that Wednesday where we saw the bloodbath, 30% up year to date. So that's my point. There is just so much volatility, and you had so much bad news that was also coming in. So Akshay, from what you're saying, put it very simply, is that cryptos are only meant for those that will stay long.
Yeah, I mean, it's not financial advice, but yes, it is for the long-term investor. And as size your bets according to your conviction and just stay on it, right? Like that's just been the best way to do it over the last 10 years. You just buy Bitcoin in 2013, and then you go do learn yoga or play tennis or do a job, get back to your job, and look at it in 2020, and then you'll be pleasantly surprised and happy.
Sumit, I can see you smiling. You want to come in on that because, for a person who started an exchange platform, if everybody's going to go long, what is it going to mean for the exchange platforms? That's something that the exchanges may not agree with, even though that could be the biggest lesson from this week.
And I think that's a good thing. I'm in favor that people should have limited exposure and do investment in crypto only if they understand it. And what Akshay mentioned, I'm totally aligned with that. You need to hold it for the long term. I think it's for investors, and in the long term, investors are the one who makes a lot of profits. I think traders, there's a lot of variables at play here. So if you are new into crypto, just buy it and hold it for the long term. That would be what I follow and what I would recommend to people.
So, Lakshya, I'm going to come back to you and the point that you were earlier making about human nature and all of that, and levering up, that if you're going to leverage up, there will be a price to pay on the way down, which is exactly what we saw. 730 trading positions that had to be liquidated. We're talking about, more than $8 billion in just 24 hours. So is leveraging up a bad thing? And then if it is, why is it provided at all?
Well, I don't think it's necessarily a bad thing. It's just it's human beings are the way they are. I don't think we're ever going to, this happens even in the stock market, right? There are periods of, absolute euphoria followed by greed. We've all seen the documentaries on the stock market in India in the early days, right? And so I just think it's a natural, it's just a natural way human beings will behave, and you can't stop. Even after they watch this interview, Nantara, I'm sure many people will go and lever up 10x and try to make it all back in one trade. And, there's only one way to learn: experience, right?
So you've got all this, people levering up. The fact also is, Sumit, that this is the platforms, crypto platforms take pride in being borderless. They take pride in the fact that they're not monitored, that they don't need to be monitored. And I thought Zerodha's Nitin Kamath made a very interesting point today, saying, who is monitoring the liquidity positions? You see brokerages that go bust when asset prices start coming down, when you have winding up of positions that is taking place. So in this case, since there is no one monitoring, one bad egg, and that's going to be really bad news for the entire ecosystem, how is this going to pan out going forward?
Nayantara, I think in this, one of the interesting things is in crypto, we have insurance funds, right? If you look at other global exchanges, every exchange has an insurance fund, and also the monitoring is something where we keep a maintenance margin of X% in let's say it's around 5 to 7%. So all of that is, the system is designed in a way where you do not get bust even if in case of extreme volatility situations, right? So exchanges infrastructure is designed in a way which is risk proof. And yes, there is no regulator here, but in the absence of regulations, all the exchanges have their own mechanics. Just like I mentioned about the insurance fund and giving leverage as per the market liquidity, as per the depth in the order books, all of those factors are considered before giving leverage. Some of the platforms which give 100x leverage, 50x leverage, they are very risky, and only people who are professional traders, they have the appetite to take risks of that level. But I think all the exchanges which provide leverage, they have their infrastructure designed in a way which which prevents any situations where there's loss, right? And of course, I mean, if as Akshay also mentioned, it's important to understand what you're getting into and take leverage as per your risk appetite, because the higher leverage you take, it's more risky for you. Even if price goes down by 10%, and if you're taking a good 10x leverage, there's a chance that you'll get liquidated. So I think definitely margin trades or futures trades are risky in nature. That's where only professional people who understands the dynamics of it are advised to take trades in that. But I think for most of the retail investors, I think buying and hodling it is the right way forward. And in terms of volatility, I think we have I have personally seen these cycles multiple times in the last 5-6 years, and I think every time there is market crashing, next time we have seen it rising also higher, right? And this is good. I think this is a healthy correction, and these corrections should are important also to have a very strong support. So I think it's a part of any other asset class. Also, crypto doesn't have a upper circuit, lower circuit, so that's where you have all of these cascading effects also coming into the picture. But I think the behavior is pretty much normal across all markets. Crypto is just because it's a low market cap asset class, the volatility is naturally higher than other asset classes.
Okay. That's a very important point that Sumit just talked about, and so let's discuss it, Akshay. And here also there are such sharp views. Do we need a lower circuit and an upper circuit?
I mean, actually, I don't, right? Because if you look at the recent ARK Invest report, Nantara, I've sent this to your team, and as of November 2020, roughly 60% of Bitcoin supply had not moved in more than a year, right? Which is kind of a testament to the types of market participants you have, right? Majority of the market participants are long-term oriented. Now think about that, right? If they had bought any time in the previous years, in November 2020, they were all up, right? But they still chose to continue holding, which shows you that this is not actually I mean, sure, there are traders in the markets, and there are times when, these periods of volatility, highlight people who made money on trading, right? Whether they go long or short, and that volatility ends up, rewarding them or punishing them. But truly, the most of the market participants you see are actually long-term holders. And as institutions come in, which they already have started coming in, institutions are not going to trade this on a weekly or a monthly chart. They're in this to hold it for a long time. And when the markets crashed, the outflows on Coinbase have blown through numbers, right? So they've had historic outflows, which means people are buying coins on Coinbase and moving them to offline wallets, which just shows you that long-term investors were buying the dips.
But actually, you've given through this course of this interview a very simplistic reason for the Bitcoin crash, and you blamed it primarily on human greed. But hello, what about Elon Musk's tweets? He tweeted 8 times in a matter of 48 hours that sent the crypto markets in an absolute tizzy. You've had the US dollar strengthen, and that is supposed to be inversely proportionate to the Bitcoin. You've had China come out and talk about regulatory curbs. Now you have the US Treasury wanting any trade above $10,000 to be reported to the IRS. So surely it cannot be so simplistic that because people are greedy and they're willing to lever up, it all came crashing down. Or is it a fundamental problem?
I actually view those signs as extremely important and optimistic for the long term, because if they're talking about regulating which part of which is, by the way, bringing it under the tax code, those things are very positive developments, right? I think there has never been an argument from anybody responsible in the crypto industry saying that there shouldn't be regulations or that should be treated differently from the existing financial system. So I view those as part of regularizing this financial internet that's being built out. And I expect that will follow even in countries like India, where we have this increased awareness of what crypto can do for both investors and, more importantly, the developer community. In fact, just today, I spoke to a 13-year-old Ethereum developer based out of Goa, and he's built a DeFi product on Ethereum called Polygudge, and his name is Gajesh Nayak. So there's an incredible amount of promising talent coming out of the developer side, which I think will be very unique to India.
Wow, 13-year-old. Running out of time, so I'll give final comment to Sumit. Sumit, you have skin in the game with the exchange platform as well. You're running a business around cryptos. We saw what happened to exchanges around the world on Wednesday. Final comments. The start of this interview, you said you're going to fix it. How are you going to fix it?
Yeah, so a lot of that has already been done, right? Whenever we see a spike in terms of concurrent users, we just double or increase our server capacity. Of course, it comes at a cost, but we are more than happy, to invest in that area. This is important, right? Especially where people's money are involved. So we have invested a lot. In fact, if you look at the cost that we invest every month in these infrastructure costs, it's insane. It's very high, right? So it's not easy to keep the exchange up and running, especially in a market like this where there are like lakhs of people using the platform on a daily basis. And then I think but I think we have improved a lot. And I think as of now, even there were various instances the platform was up and running even when we had moments of extremely high volatility. Apart from that, I think I would say that crypto is in a technology like this and a space like this, right? These moments, right, of volatility are part of it. It's not going to be a linear monotonic increase. You will have a lot of bumpy rides along the way. You will have moments where people will do panic selling, where people will want to buy the dip, right? And exchanges have to have the responsibility to ensure that the system are up and running. And I think we have we have been able to serve, to those customer needs to a lot of extent. There's still some, lot of areas of improvement which the team is working on. In fact, we are hiring also pretty aggressively. Right now, we have a team of around 150 plus people. The plan is to double it up in the next 3 to 4 months. And, the plan is to invest a lot in the people, a lot in the infrastructure, a lot in terms of surveys where people, if at all they have any problems, they get the fastest resolution possible. So a lot of investment we're planning to do in this area. We've already done that from last few months, and a lot of investment will further go in terms of building a very solid exchange infrastructure.
So big lessons there as far as the big crypto crash this week goes. Boy, what wild swings that we saw. So we thought it'd be interesting to get an exchange platform as well as an investor to get a full perspective. Thanks a lot, guys, for joining us here. Have a great weekend.